what percent of income is taxed for small business? It's more than you think. And it's the lack of strategy, in my opinion, of why people continue to pay invisible pain, overpaying taxes. So you're contributing to federal income tax, state income tax, self-employment tax. And if you don't know how to navigate and don't have a good tax person and you're using TurboTax or some simpleton thing, it's never going to work. If you just do it that way, you're going to end up in the 30, 40, 50% tax bracket, which means you're paying way too much in tax. So let's break this down. So number one, what small business owners pay and why it's higher than the most. And I would say it's lack of strategy, but we'll get into that. Number two, what are the legal strategies to actually know that you're going to reduce your taxes? And that's what we do so brilliantly in the way that we do your corporate structure, and then use corporate resolutions to actually document the deductions. Lastly, why your entity structure is going to determine your tax rate more than your income. So most of you base your tax rate on your income. There is so much better strategy than that. So let's begin. Grab a journal. So by the way, we have these beautiful YouTube journals and you need to grab one. And inside you're going to start documenting when you watch a video, what did you watch, what did you learn, and what do you want to do about it? So you start getting a complete new thinking about money. 365 days, you're going to be a very different person as long as you continue to lean in. So what do actual small business owners pay? Let's go there first. Number one, and I'm actually going to read some of this. Self-employment tax alone is 15.3 for the first 168,600 of net earnings. This is before federal income tax. Then federal income tax takes you in and you're going to be 40+%. So now if you're just looking across the tax rate, you're going, why would I start a small business? I've already got so much in tax that I have to pay out. Stand by. Sole proprietors are going to get hit the hardest. We are completely zero fans. I'm talking zero. Do not be a sole proprietor. The first thing I do when I have a business idea or find a partner is we start a company, and then we get a bank account, and then we get credit cards, and we actually set the foundation. We get a database. We can actually start marketing whatever the new thing is. That is a business startup very quick, and it's how it should be. Because staying a sole proprietor, A, puts everything else you own at risk. It's only under your social security number, so you don't have a tax ID number or an ability to build corporate credit. And that's a huge part of the strategy, is using entities to actually bring that tax basis down. So the legal structures that are going to help you is an S Corp. An S Corp reduces that self-employment tax greatly. The part we don't like about what the internet machine tells you is, get a small W-2 and take the rest in distributions. No, you actually pay it in a management fee to a different company of a different quality. That's not an S Corp. So you have multiple corporate structures. That is the name of the game when it comes to reducing your taxes. It all needs a legal reason to make money. It needs to make money because you now have more paperwork. You're going to have more taxes. You're going to have to file an S Corp, say tax return, maybe an LLC, and maybe a C Corp. So now you'll have all of that in a collective tax strategy, but you're going to pay less. Like a lot of our clients, after they've been with us 3, 4, 5 years, not year one, get under like 15, 10% in taxes. Like you literally can get that prescriptive if you pay attention and you care enough. Most people just can't be bothered. It's like, well, okay, let me just tell you how much you should be bothered. For every $10,000 a year that you overpay in tax, if that $10,000 a year, and then by year 2, it's 20, and whatever you've invested in, it starts compounding, and say you're invested at 12, 13%. After 20 years, you have given 1.1 plus million to the IRS versus put it into your bank accounts. So to me, it's significant. Every 10,000, I would be waking up in the middle of the night going, what else could I do? And I would be back in touch with my tax strategist to strategize. And if you're in our community, you're at the big table, you call me and say, I still feel like I'm paying too much. What else can we do strategically to get this cost down? Obviously, maximize every deduction. We will help you do that for the process called forecasting. Open up a SEP, a 401k, whatever our team of experts actually advise for you. Because right now with the Big Beautiful Bill, with $72,000 in 2026, the Big Beautiful Bill allows for a lot. So whether you use it as a tax strategy at the end of the year or not, it's up to the tax team. And it's up to you to make a decision. If, say, you don't want to put $72,000 into a 401k or SEP, then are you accredited? Are you enough where you could go buy, say, gas and oil? That's the biggest. It'll wipe out your taxes, not completely, but it'll take them way down. You could buy aviation. Again, huge depreciation schedule. Buy real estate. There's so many things that you could do to actually alleviate your tax strategy, but it's how you make the money, how you do the deductions, and what you invest in. Now, before we continue on to finish up, I want you to subscribe to the channel here, click that notification button, be here 5 days a week. So we talk about everything and anything. Grab a playlist and just say, I want to talk about credit versus debit cards. I want to talk about how to amplify my entity structure. I want to talk about how to buy real estate, gas and oil, you name it. We talk about it here. If it's not, go to our comments section, put in some topics or some content pieces that you want me to produce, and we will produce them for you. Be right back out here. So again, a real tax plan starts with a real tax strategist. Now, I'm going to just give you this. Good luck finding one. That's part of my role, is to put a team together for you to access. So I have a whole variety of them that you can use once you become a client on our side. If you try to find one out there, you have to really, really learn it so you can guide them. Most CPAs and tax strategists, I wouldn't even call it tax strategists, CPAs are historians. You're going to hand them your stuff for the prior year. They're going to do a tax return. And because it's the prior year and it ended 12/31 of whatever year it is, it's over. You can't go back. You can't fix the back history. You could always forecast forward. So what we want is not just to record your history and you pay tax because there was no plan. We want to make sure there's a plan. So every quarter you're going to meet with a tax strategist. You're going to have a whole plan with them. Do you need another company? Because that's a huge piece of the strategy. You may, like I said, have 2 or 3 companies. And do you want to have that, more paperwork and 3 tax returns? Or you want to overpay tax that you would never get back, ever? So for me, I'd rather go buy gas and oil. I'd rather pay for the strategy and keep my taxes low than actually have to pay the IRS with 0 returns. So in the tax strategy, you will pay a little bit, but it is worth it when you see those returns. And for those of you who qualify, we do 3-year tax returns review for free. And just think, if you get $10,000 back per year, 22, 23, 24, you get $30,000 back. Now, the IRS is in no hurry to pay you, so it's not like a quick thing, especially with all the government shutdowns. That's like way in the back of their list to get it done. But it's filed and it will come to you at some point. So again, if you have any questions about this, go to askloral.com, ASKLORAL, ask questions, make requests, and we'll be back tomorrow.